Hey, hey, hey! Welcome again to the weekly wrap up.
Hello, everybody. Thanks for joining us. I hope everyone's having a great week so far.
It's only Monday, and most people around the world are just getting up now, Josh.
That's true. That's true. In Australia, we are ahead of pretty much the rest of the world watching in. So, good morning, good afternoon, good evening from wherever you are in the world. Lots of people watching on X coming in and YouTube. And of course, all our lovely members in Getting Started in Crypto who have been submitting questions and charts. We will get to those towards the end of the wrap up. But before we get there, what should we do, Lise? Should we have a look at Bitcoin?
I want to have a look at Ethereum first.
Ethereum.
So reason being, it's just obviously it's an alternate coin. It's one of the majors, but it does make bigger percentages than Bitcoin. So it's always good to have some bags in Ethereum. We like to have 25% of our long-term bags, don't we, Josh, in Ethereum, and 25% in Bitcoin. And it just Ethereum is just moving nicely at the moment with the promise that there could be an Ethereum ETF. So yeah, it's a bit exciting. So we've got some candles forming that are really, really cool. So, and this is why you're going to want to be long-term in Ethereum. So this is our 2-week chart. So this is my Be Like Lisa indicator that we've been testing for quite some time. And we have had a buy on the 2-week chart, which is huge. So we're quite toppy on the stock RSI, but the RSI below has got room to move. And Ethereum does like to stay high on the RSI on the higher time frames for a long period. So what we want to see is once this candle closes, we've still got a week left of this candle, so potentially we can go higher, and it's going to be quite a large bullish candle. We can see that we got a mega candle on this side, so on a 2-weekly chart. Dropping down to the weekly, it's still nice, and we're in our 3rd consecutive mega bullish marabou candle, which is basically what I like to call the fuck you candle, if you follow me on Twitter. So that's basically all the shorts are getting liquidated right now. If you're on exchanges like Bitfinex, where you can see that, you can just see the shorts are actually getting slaughtered. So let's have a look where this can go, what the potential is, and that sort of thing. So on our lower time frames, on our weekly, we've got plenty of room to move on these indicators. So the stock is saying that it's crossed over in this region, and until that crosses back down, we're not getting a pullback. So potentially we're looking at this was what is known as a leading diagonal in Elliott Wave. It could potentially still be corrective until we do break that high, but there's the most valid pattern at the moment that I'm seeing, potentially if we have an ETF on the way. And we know that what that did to Bitcoin and what it continues to do to Bitcoin is going to be really good. So our 1.382 comes up to the 7,600 mark. So potentially we were looking at patterns during the last bull run that went to $10,000. So potentially for Ethereum, that could be this bull run. So we might see $10,000 this bull run. So that's going to be super exciting. So we've got, it's deflationary now and they're burning ETH, and, this is going to drive prices higher. So when we've got less supply and greater demand, obviously prices rise. So that's what we want to see in ETH. So as soon as we can get past that top, which was about, where were we? 4,800-ish. So passing that top convincingly confirms a bullish pattern. and then we're off and running. So we're almost halfway there. So what we want to see on this is touching the 0.5, which is about 3,290, and sort of pinching through that region, and then a continuation. We should get a pullback around that area, and then continuation from there. So that would probably be our wave one high, and then the pullback will commence. That's in line with Bitcoin halving. So it should be about the same time. So once we get those, ETF, maybe rumors will be denied or something, and this will pull back. Same as what happened on Bitcoin. And then all of a sudden, oh no, that was fake news, and off we go. So yeah, so let's see what happens with Ethereum. But I do think we're going to see into the 3,000 soon, and maybe even higher.
Oh, that's exciting. Good news for Ethereum hodlers out there and traders who got in a bit earlier. Anything else you'd like to share with the world?
Yeah, let's jump into Bitcoin, because we do that every week here. So this is a quantitative chart. I'll bring that up. And every week we just check in to see where it's at. So this is a monthly chart this is a 3-day chart actually. So it's on TradingView if you want to check. It's been following this pattern beautifully. Obviously BTC does a 4-year. It's built and designed to move within the 4-year cycle, which moves within the quantitative tightening and easing. Basically, that just means how the governments work. So when they put interest rates up, when they tighten because inflation's too high, that sort of stuff. So that's why we watch the US government and all the markets there. Because it ties in with crypto and with Bitcoin, because they're designed that way. So we are above my first red star, which came down to almost my green star here. And then we are climbing. We're doing the climb to the 2024 halving. Potential upper rallies, upper regions, we've got between 56 to 59 here. And then we should see 67 to possibly 72,000. So we might get a new Bitcoin high in the not too distant future. That being our wave 1 of 3. We will then come back when we go into just for halving, and we will see that pullback for the wave 2. Whether that's huge or not, I don't know at this point, because there is strong demand. Often exchanges and whales will sell off at the same time as miners, just so they can buy back cheaper and they've got more Bitcoin. So that is something to be aware of in those regions that we're coming up to. So that's halving sort of end of March, early April. At this point in time, it sort of changes depending on how many blocks are mined. So when we get closer to that region, we're going to know when that's happening and when the miner sell-off occurs before. So because they want to sell off to stay in profit, because they're going down to half the rewards that they're getting at the moment. So, and because this is the 4th halving, it's going down. So that's kind of what I'm seeing for BTC. Immediate time frames, potentially we're in this region. We really need to break out of this region. We could go sideways for a little bit, breaking out of this channel that it's forming. So we've had 2 channels, one which it's just at the top at, and then this second one where we're climbing up. So any pullback, we would likely see about 44.5 immediately, but it is missing a wave in this region. So we don't have a 5th wave. So we've got a 1, a 2, a 3, no 5th wave. So that needs to occur. So that might take us to our magic 56 that we saw in the other chart. So that 56 to the 59, and then we'll get that pullback possibly. Depends how fast this moves as to where, BTC is at the time of, when the miners start selling. So the higher, the better, obviously, for the miners and for the exchanges to be profitable going into the bull run and moving forward.
Okay, exciting. So just for those new people coming in, and this is the first time they're experiencing a halving, have you got any tips for them if they are trading it or hodling it, or how should they be potentially positioning themselves?
So, depending on how high it goes, so for most taxation around the world, it's about 30 to 50% that you're paying the government on a taxable event. So, if you're not a trader by profession, there's different rules for that. But if you are, just doing it to increase your income as an investment, that sort of thing, you can lose quite a bit of money on taxation. So, what you want to do is just sell the larger dips, because you don't want to be selling every dip, because that's going to cost you lots and lots of money. You're going to eat away at your profits. So if it gets to 60, 70, potentially there could be, depending on how much is sold from miners and exchanges and, whales and that sort of thing. There's a potential that we're coming right back to this region, which is about 32K. So that's essentially halving at that point. So if we go back to where we had this run up in the last run where we went to about 13K, then we came right back to around, $3,200 at one point. So this $3,200 to 13K, and then back to 3,600. So, that's the sort of volatility of Bitcoin in these corrections. Potentially, I don't think we're, still in a correction. I still see charts saying that this is a larger pattern, ABC. I don't think so. I think with all the ETF trading and with, going into a bull run, we're not seeing that at the moment. So I do think long term Bitcoin's going up, and this is the bull run that we're going to see 100K.
Wow, that's exciting, an exciting figure for sure. There'll be a lot of buzz when it gets that high.
And the thing is with Bitcoin drives the market. So for a bull run to start, Bitcoin needs to be doing something exciting that the media picks up on it. So if Bitcoin can break to a new all-time high in this region, then that's what we're looking at. That's why that's when the retail buyers, unfortunately, will come in near that top, and halving will happen. So if they don't panic and sell, they should be okay, because it's going to go back up, hopefully. But that's kind of the state of the market. What happens, the retail investors, mums and dads, come in, they don't know what they're doing. They're like, oh, the media keeps saying this Bitcoin thing's going to 100,000. So, they want a piece of that, even though they could have bought way down at 16.
Even though essentially you could say those who are listening in right now are positioning themselves in a great way, so that when retail comes in, they're already 2 steps ahead.
Yeah, exactly. You want to be really sort of building your bags and DCAing at the moment. So for that, I always say that 20% should only be ever traded, and that basically your hodl bags are 80% of your capital that you have in the market that you're not touching and you're not actively trading, because that way you've got a greater chance, especially if you're not a trader all the time. You're not a long-term trader. You're just new to the crypto. You're new to trading, and you don't, you've got a second job, you've got a first job, whatever. And this is just some supplementary money. It's best to let it run. So obviously put some stop losses on there. So if it does come down, and, that protects your capital. But when you're in sort of longer term trades, you can keep those really, really, really loose. Or, if you want to sell it right at the end of the bull run, which is going to be about September 2025, then, you can put it in a cold wallet storage. So, and the best place to find all the information is in the Moon Mag. So see what I did there?
Very good. Very good. Excellent. Okay. Now, before we go, we're going to have a look at some alts, and we've got some more questions for everyone in getting started in crypto.com. So was there anything else you wanted to share, or are we ready to rock and roll
I
with that?
think that's all we need to share with the world and Twitter and YouTube. And very soon we're going to be going to, we were just looking at it today, LinkedIn and Instagram Live. So I'll be everywhere. You won't be able to miss me. You'll be like just getting, buzzed everywhere.
Yeah, fantastic. That's what we like. Okay. All right. Let's say goodbye to X there. And let's say goodbye to YouTube as well. See you again.